Good morning. Good morning, guys. Any idea why the market is going down in pre-market? Because the market's just gone straight up for the last 6 months. It's got to ebb and flow some. Markets don't just go straight up for 6 months and never have any pullbacks. I would say what the market's doing right now is pretty healthy. Also, the sentiment with, if you notice, like your quantum stocks yesterday, right? So the speculative stocks were down 10%, right? Basically across the board. Even if you looked at a QS, down about 10% across the board. Then it didn't help that Palantir reported earnings, and the earnings were fine, but then we started to roll over in after hours from a 207 close to basically 197 or 198, something like that. And then now we're gapping down, obviously, but with some of the pressure of everything that's been going on in the market. So whether you've been some of the rare earth stocks, you've basically round tripped some of the move. Actually, should I say all of the move? You've gone from 32 back to 10, right? If you look at USAR, from 43 back to 16. So it's like this was one of the speculative groups that's effectively round tripped the move. You've now had quantum, starting to act pretty heavy, and then now it kind of looks like they're at least headed for the 50-day. And then you look at some of the nuclear stocks, right? And this one I'm actually short, and it also looks like this one is trying to head lower. And so you start to break down some of the speculative stocks, and then you start to really take into consideration just how extended an earnings name was, and that's just kind of it's just what happens. It's just what happens. That's actually not true. We were actually rolling over before that, right? I just got done showing a bunch of speculative stocks that have been getting their ass kicked, right? It just so happened to be. And by the way, Michael Burry was getting, situated in his position like 10 days ago. So even he wasn't nailing the top. I have no idea. I think AMD has been acting great, but I don't know what the reaction's going to be to earnings. It's not really my job to know. My job is to react. Yeah, there are some stocks that are holding up really well. Yeah, BE. BE's down about, $15 off yesterday's highs, but yeah. What do I think about 5? It's just trending. I don't really see a setup here that is going to lead to some explosive action. Also, I believe they probably got earnings at the end of this month. I don't really like 5. It's not really setting up sideways. VICR way too extended. You are struggling when holding to swing trades, but CSCO on Friday, but held TSM overnight. Any tips? Yeah, size properly. That will help you big time. If you're oversizing, then you're going to struggle holding on to trades. You have to size things properly. Yeah, we'll keep an eye on to see how some of these Chinese names act down here today. I don't know if it's going to be viable, and part of the reason is if the market decides to keep going down, and there's some steady pressure in like Pinduo Duo or Futu today, then I would just leave it alone. No, I didn't get long path yesterday. I didn't think it was a nice enough chart. Cypher $1.4 billion offering. I was wondering what that move down was. What stocks have a HVC setup at the moment? I don't necessarily see any at this time. Dave? Yep, very nice. We'll see again another one. What do they do with it for earnings? Do they sell it off today, or do they hold it up? Lily's great. Yeah, Lily does look great. Big base. Yeah, we had far too many. You remember Scotland? I think there was like a stat out there where it was like 65% of the days this year we have seen a gap up overnight. It was like the most since I forget how long, but every single day there was a gap up overnight, which also made it very difficult to hold positions. But when I look at the NQ, this just needs some move down. We've had such a massive run from those April lows, just a month of nothing. I know people can't stand to hear that, but it's just the reality. A month of nothing would be great. Yeah, I think swinging short is also an option, and that's not to say you're not going to get stopped out of stuff. Like Rigetti, I had a 42.5 right on 1024, and then they came and stopped me out on 1030, only to then just completely flush it out yesterday, and then now gap it lower. So a little bit frustrating, obviously, but that's all right. But then even again on the other side, something like Oklo, when you get a little extended in one of these speculative names, I thought this squeeze out was awesome. This squeeze out was super awesome. And then just a complete fail from there. My guess is we could probably go back to low 100s, even a little lower. My Tesla stops on my recent ads will be yesterday's lows if the market opens up there. Yeah, I'm still in ARC long. I have a $59 average. So as long as we're trending above the 50 simple moving average, I will be in. And you see these two lows basically. So price structure to me matters. 83.30s will be the spot where I exit, not necessarily the 50 simple moving average. It might be that it aligns in that area, but I don't necessarily care about the lagging moving average. I care more so about price structure. So 83.30 will be the spot that I'm watching for my exits. You're prepared for them. There's no special scan. I don't widen out my watch list every day. So like I'm focused on what I'm focused on, even stocks that I believe to be in uptrends that could be pulling back to key moving averages. Call it something like Intel, right? Well, Intel's on my radar and now we're gapping down right into the 20-day. Well, how will it act on a smaller time frame? And when I go to buy it, how is the market acting in real time for me to be able to buy that? So just kind of my thinking as to how I get involved in pullbacks to ascending moving averages. There's no scan that spits them out. I'm only focused on the names I'm focused on. I don't just start widening out my watch list in the middle of the day. I I adjust my watch list in the evening when the market is closed, not when the market's open. The only the only thing I would say to that is if there is a stock that's showing promise that maybe was off my radar, I'll put it on my larger watch list, but I won't act on it until, I'm more prepared for it a day later. I think we have a misconception here, Chris, because I talk about it quite a bit of what a 620 is. The 620 setup is not a daily setup at all. It's not a daily. There is no dailies. I'm looking for flat base breakouts, high type flags, moving average undercut and rallies, high volume closes. I'm looking for daily chart patterns that I understand within good groups. A 620 setup is just an entry tactic on a 5-minute chart, the same as a 5-minute opening range break and a 30-minute opening range break, right? They're just entry tactics. That's all it is. But it's not stocks trigger 5, 10, 620 setups in a single day if they're trading choppy and sideways. Not every 620 setup is a entry signal. So like when I get this from a bunch of students in the room too, it's like Ariel, 620 setup. It's like, guys, the market's going down. It's in a shitty group. We're not buying this as a 620 setup. Like, there are good ones and there are bad ones, and there's a lot of them to leave alone. So I hope that makes sense, man. Not every 620 setup on a 5-minute chart is a buy, and not every 620 setup on the downside is a sell. Yeah, I agree completely. Yeah, QQQ could go back. QQQ could go back a whole hell of a lot further than 611, in my opinion. Although that would be completely healthy. Fill in all these gaps. I mean, these are short-term gaps. These aren't, in my opinion, Scotland, these aren't breakaway gaps. These are just momentum gaps. Like a breakaway gap, would have been like something way down here. Like this one could very well never be filled. It's probably likely that this gap here never gets filled from 421 to 422 when we got the market follow through day. So, but these are just I could see these being filled no problem at all. Yeah, BABA follows the Chinese index, but that's my point. You could still see some weakness in FUTU and PDD, and you probably just want to leave BABA alone. But we'll see. Maybe they do start to bounce from the 50 today and are worth a little stab. And you keep your eyes on KWeb. No, but I will probably be taking it off today. So slightly red on it at the moment, but 5% position, so really no harm on it. Down about 70 cents. STLD, steel name. Let's take a look. It's not really a name I care to own, to be honest with you. It's a slow mover. Oh, beautiful. Yeah, I thought SoFi looked interesting yesterday, but obviously this market's not being too friendly, completely reversing it. But nice job trimming some off. No, I'm not still short iron. I covered my iron in yesterday's fade. I actually dodged a pretty big bullet, if I'm keeping it honest. I was up quite a bit on it, after this little move down to 57. Then this squeeze in the morning, of course, I was sleeping. And then I knew that 74.15 level. I talked about this in last night's video. I knew that 74.15 level was super important. I was this left side peak and first 5-minute bar. We had a big pickup in volume and we traded below it. And I knew that that was kind of like my hard line in the sand. And then I just got really lucky with this fade. And this is where I started to cover some into this fade. So it became a very, very, very manageable loss, which is like a 0.4% portfolio hit. Not a big deal whatsoever. And on the same breath, which, maybe looking at it now, I maybe shouldn't have, but I also covered some Oklo into this little pop right here. And it took half of my position off for a $20 win. So I'm still sitting in the other half. Am I looking to add if today reverses? Here's the thing. I'm not just like looking at a little bit of weakness. I'm looking at market-wide weakness. So it's going to take a little bit to turn this ship around. We'll see. I think today is a good day to just track what's holding up best in terms of relative strength, not to necessarily trade it. Yeah, PBA. So, and somebody who I know understands the 620 setup really well. Going back to the comment that I made, it is not a daily setup. You don't look at it on an intraday and go, oh my God, I got to buy it. A stock could just literally be in no man's land, and it just gives you a bunch of these signals all day long, right? You're looking at key daily levels, undercuts of prior day lows, pullbacks to ascending moving averages, maybe pullbacks to the top of bases, whatever your key area might look like. And then you're looking for this entry tactic in those areas. So if you had zero access to world news or what's going on out there, could you still trade and make money purely based on technicals, earnings, and EPS? Yes. And also, I just need to know what groups things are in, right? Yeah, I could still make a shitload of money. I don't have to know news at all. I don't trade based on news, even today, right? I don't trade based on news at all. Technicals are what keep me safe. And things being in particular groups that are showing relative strength is what gets me interested. What would be a good entry for CCJ? I don't know that I see one at the moment. Now we're gapping down 96. I mean, who knows? Maybe if this thing goes all the way down to $92 or I'm not sure, with this gap down, maybe $95 all the way down to 92. And then, check to see if there's some strength coming back into the market. A 620 setup. Yeah, it's when your 6 period or 5 period EMA on your 5-minute chart crosses back above your 20. And what happens at that point is now you're starting to get, even on a smaller time frame, momentum come back in, but then also on a smaller time frame, you have an established low in which to risk off of. That's it. And the idea is you could be buying a pullback on a daily chart, but it's starting to turn up on the smaller time frame, and you've got an area on the daily chart in which to risk off of. Yep. Agreed completely. Probably would be easier to make money without news. Darvis wrote about how it was easier to trade in France than it was in NYC, where he had constant news. You don't need news all the time. It's irrelevant to me. I like to ask myself, what group is it in? Is the group acting well? And then if the group is acting well, what's the technical setup that I use to get myself involved? Could be an undercut and rally, could be a earnings gap up, could be a flat base breakout, could be a break over prior day high, could be a break of just a low cheap pivot that maybe not as many people see. And then how much size am I putting on? Where's my stop, right? A lot of other things matter than what's the news. The news doesn't matter. It matters, but what matters is price after particular news anyway. What's price doing after the news? It's going to be quite a few charts in no man's land today. you're down 1 to 2%. That's not that much. On new positions, on 1/3 of a full size position, that's very good that you took sizing small. Would you just exit and wait for a better entry? Well, it depends, right? What if your stop was 5% on some of your positions? You just gonna run for the hills, right? If you're only down 1-2% on a new position, but your stop on some of your positions is 4, 5, 6%, depending, where you placed your stop. Respect your stops. I know the market's not acting super friendly at the moment, but I would just say respect your stops. It seems like you've got proper size, like 1/3 of a full position. Like, what's a full position? 10%, I'm assuming. So you've got some 3% sized positions on. I mean, that's not bad. You could probably manage risk fairly easily there. Do I think Joby is holding up well? I think Joby is a speculative stock, just like a bunch of these others. And, it's holding up well for right now, but it's also about to be losing the 50 simple moving average. And it looks like maybe some of this support that it's built in here. So I don't know. After a big drawdown, do I revert to one setup at a time until it's closed with smaller positions, or are you willing to place a smaller amount of trades, but just smaller size? When I am kind of in the middle of a losing streak, I size things down, but I don't just go back to only focusing on one setup, because there are times when one setup isn't working. Now, naturally, I like buying breakouts, right? But I know that most of the time they don't work unless we are coming out of a correction. Breakouts work best when you're coming off of a market correction. When you get to a point where the market's a little extended, you really want to be buying undercut and rallies. Those are the best. Pullbacks against ascending moving averages, right? Where it looks like it's about to fail, but then it starts to turn back up. So if I'm not trading well and I'm in the middle of a losing streak, I don't just say, okay, well, nothing's working right now, I'm going to just wait until breakouts are working again. Well, no, I make adjustments so that I can still try to get involved, but in the thing that's working best, which in a stretched environment might be pullbacks to ascending moving averages. So, and I also like buying earnings gap ups. I like buying high volume closes. I've been kind of watching some of what Scotland teaches for fish hook setups. So, there are other entry tactics that work, but you just have to recognize that so you can take those and then kind of take it from there. Would I exit Tesla this morning? No. I'll exit my Tesla ad this morning if we take out yesterday's lows, and we start to really lose that 453, 452 level. But I'm not going to exit all of my position. I'm in from $350, right? Like, what's Tesla doing today that it hasn't done for the last 3 weeks? It's just chopping around. So I will exit my ads, but I won't exit the entirety of my position. Yeah, I'd say Amazon's holding pretty well. Amazon just broke out into a new all-time high. So out of a big cup and handle. What would be wrong if Amazon obviously is going to be gapping down some today? I mean, some people will view this as just a little island gap, and I'd say, you know what, I agree. But what needs to happen? This thing just needs to go sideways for a little bit, build a high type flag, and then, we'll take it from there in a couple of weeks. Which two setups have the highest win rate and risk reward based on your data? Which one should I master? My favorite setup, which I think has the best win rate and risk reward, is a flat base breakout. I think that's number one. You get really low win rate with undercut and rallies, but you get the best risk reward, in my opinion, on undercut and rallies. The best. So it depends. There's like a very happy medium. I like flat base breakouts because they're very easy to see. You see the volume uptick as it's going through a certain level. It's like so simplistic, a good above the line, bad below. Um, so yeah. Is there a scan you run to find flat base breakouts? Yeah, 1 month, 3 month relative strength scan, and I just scan the hell out of it. My job is to also focus on stocks that are showing relative strength. So that's why I love a 3 month or a 1 month RS scan. No, I don't know about MVTS for today. Not only did it get crushed yesterday, so a couple of things. It's already down from 18 bucks. We had a 10% down day yesterday, and then now we're gapping down another $2 today. I don't know that chasing this thing at 10 bucks is the right thing to do. Right? You're effectively chasing this thing after it's already made a 45% move lower, basically. I don't know that that's the right idea. So would I consider any buys into rising moving averages today on any leading stocks? If no, why? Because of here's the reality. I don't think we have pulled back enough. Okay. I don't want to call top in the market. It's a really strong bull market. I don't know that we've topped. I can't say that with any kind of certainty other than a lot of other stocks and breadth has been super shitty. Whoops. Let me adjust my screen. Other than breadth having been, really, really poor for the most part, and there are still, it became a really narrow rally. That's my issue. It became a really narrow rally, and there's already a lot of stocks that have undergone corrections, big ones at that, but it would just take a few weeks to really set things back up again. And I don't know that I want to come in and buy stocks against their ascending moving averages today. Could it be fine? Yes, but I got to wait for the market to turn up, because one of the things that matters when you go to buy undercut rallies, like let's say I'm looking at tech stocks, like let's just say for the sake of discussion, here's a name that I already own, Dell. Let's just say Dell undercuts this 20-day, which is 155, and then starts to rally back up. Okay, that's fine. And maybe that one's worth taking. But what will I also have to see? I will also have to see the QQQ going up. What else would be helpful? I would also like to see maybe NBIS going up, maybe NVIDIA, perking back up, maybe AMD going back up. So those all matter when I go to buy Dell. Like Dell on its own in a vacuum is not that great. Dell on its own, when the NASDAQ's going up and it's got some supporting action from some of its peers, that's much better. Am I looking for Meta to bounce play soon? I would take a look at Meta and then go back a couple of quarters and take a look at DEC. And then go back, 2 quarters ago or a quarter ago and take a look at SHAK. I'm not trying to compare Meta to DEC to Shake Shack, but price action is king. And things only can play out so many ways. When you're living under the 200 simple moving average, I don't give a shit about Meta, nor do I care when it's going to bounce. The reality is I'm not looking for that bottom, right? It's got to then go sideways for a while, tighten up, and then start to turn back up. And maybe I'm there after it tightens up. But for now, it's just going down. So no, I'm not looking for a bounce play on Meta at all. At all. Stops are usually 5% on 10% of a portfolio, tend to get out once pullbacks occur, and tend to miss plays like light. I was never down a full 5%, and it never really broke structure, but I exited end of day. Thoughts? Size things down, man. I don't see a reason why, you would have 10% of your portfolio and then micromanage things. So 3 to 5 days is what I normally look for out of a breakout, or, once I take my entry, I'm looking for a 3 to 5 day push. 3 to 5 day push, allows me to peel some into strength and then just hold the rest. So, and hold the rest on an ascending daily moving average. Well, I'm going to be using yesterday's lows for cut of my ads on Tesla. So I added some yesterday. I'm going to be effectively using these lows, which we're kind of underneath at the moment, but we're fine. It was a small 5% ad, so totally fine with it. And plus, I've done a really nice job trimming some off on Tesla. So I hate to give back money, but it just is what it is. Thoughts on Uber? It looks like it's getting its ass kicked in pre-market for earnings. My thoughts are this action sucks. Yeah, you add 2% cushion on TSM. Yeah. I mean, that's it's kind of the market that we're in. I had a $300 average on it from 1028. I cut it on 1031 right at my average. And then, it started to try and bounce yesterday. And I thought yesterday it was up too much by the time it got to that 308 breakout level. And then it just, not only kind of failed into the close, it then failed quite a bit overnight. So, I only need a couple percentage points, to be comfortable to hold something overnight. It never really bothers me to give back unrealized gains. Giving back unrealized gains is never an issue for me. Yeah, I look at the peer section. Yeah. Like I'll look at an individual stock on my my scans. So I build a bunch of scans in FinViz. And then, I go through those scans all the time to help me build my watch list. And then, if I see a stock that looks really great, again, and it's like the only one in its group that looks good, then it's just a one-off. Again, a stock in a vacuum is no good. A stock is better when it's got peers that are also acting well, right? That's how institutions are just buying the basket. When peers are looking well, that's how you get a Stan Druckenmiller saying, "Oh, Argentina's got Malay. Buy me the 5 most liquid Argentinian stocks." You think he's the only bright dude on Wall Street saying something like that? No. And so they just buy the 5 most liquid Argentinian stocks. And then there's a point in time when it doesn't matter if you're a financial stock or an oiler, GGAL or YPF, they're both looking identical. They both look identical because institutions are just buying the 5 most liquid. So in other words, when a group is acting well, whether a country is being viewed as a group or whether an individual industry group like semiconductors are acting well, you have to learn to put those 2 and 2 together and understand the group is acting well. And oftentimes a group will look very similar. Very similar. Yeah, MDB. Yeah, they're not making stuff easy right now. Can I explain MVTS again? Yeah, I wouldn't be shorting it today. It could probably go lower, but today's not the day for me to short it. There was 700 stocks down 5% yesterday, which is quite a bit. That's a pretty big number. What do I suggest about current positions? Lower stops to give some more room for a bounce? No. That's how your first loss is normally your best loss. I don't extend my stops in any way, shape, or form. Before I ever buy something, I know exactly where I'm leaving in case I'm wrong. And there's a lot of times that I exit and then the thing bounces, but I don't give a shit. Right? It's not that there's never a time and a place to extend your stops and do something beyond what your plan was when you got in. You have to have a plan of where you leave when you're wrong, and you just take your exit when you're wrong. Right? That's it. How do I use expected value? I don't. I know Lance talks about this all the time, but Lance traded smaller time frame. I don't know my expected value because I don't know how high something can go, right? I only know my risk upon entry. So, and I've talked about this before, when I bought ARK at 59, I had no idea that this breakout here was going to go to $90, right? I had no idea. So, I only know my risk, and I knew that I was risking $1. But all of a sudden, you're risking $1 and you end up catching a $40 or a $30+ move, right? But how do I calculate that expected value into my trading? You can't. Yeah, so really Tesla, as long as we're above yesterday's lows, which it doesn't look like we're going to be at the open, it depends. I'm going to give it the first 5 minutes to trade. It's really no big deal. It's really not that big of a deal to give it the first few minutes, but we'll see. A lot of talk about 620 setup. Today's a 420 setup day. That made me chuckle. That's good stuff, dude. My watch list, my big like market wide watch list probably's got about 70 stocks on there that I go through every day. And then from there I try to get all of my tradable names. My watch list or like my ready list might have 10 or 12, but there's usually no way that I can execute on that many in a day, right? No, I don't subscribe to. I don't have any subscriptions for analysis. I don't really need any analysis. I wouldn't know on what I need analysis on. I mean, I've got a subscription for some news. No, I don't trade the VXX. There's a lot of periods when breath is shitty. Sometimes the stock market then plays catch up to the bad breath. In other words, the mega caps begin to come down. Or because normally when it's bad breath is you've got a handful of stocks that are holding up the indices and then everything else is kind of acting poorly. And then sometimes what you get is on the flip side where the mega caps continue to hold up really well and then everything else that has undergone a correction starts to eventually turn back up. So there's only really two ways that it can play out. I don't know. This isn't really something I would trade. It's not extended. I mean, it's gapping down overnight, so it's technically not even on the 21 day anymore. Yeah, you're going to have to make it. ADR is not something that is a tool on Thinkorswim. You have to make it. I don't own Palantir. And if I did, I would have trimmed some into yesterday's close. Yeah, I'll be watching Dave, but I won't be trading it today. I will just be waiting for a continuation setup down the road. Yeah, I use the same scan. I use the exact same scan. When we get into quote unquote bear markets, I want to know what's holding up best. And when we're in bull markets, I want to know what's acting worst. I don't know, at least a third. Depends how big the group is. I don't have Intel anymore. So it depends if you're asking me how you should manage Intel, in which case I would tell you to respect your original stop. But how will I be managing the Intel gap up? Well, I'm not long Intel. So we'll be seeing if this thing, just undercuts the 20-day, which we're doing now, and then we start to rally back through as the market's turning back up. My overall watch list, yeah, I typically try to include some of the best stocks that are in the leading groups. Every now and again, a chart kind of sneaks through that I didn't have, or charts that I think to be most actionable. Let me see. I just shared the 3-month RS scan in the chat. What's the best news source for real-time breaking news? Bloomberg. I use Trade Exchange, not Bloomberg, but yeah, Bloomberg. What will make me buy pullbacks even if the general market / group strength is missing intraday? Nothing. I just won't buy the pullback. Right? I mean, it would have to be an incredible setup, in which case I would buy it with smaller size. And then as soon as the market started to turn up with some of the peers within the group, then I would add more. It's not going to do you any good, brother. If I share that list of 70 stocks, it's likely that after today, that list changes quite a bit. And no, I don't know how I would share it here. No, I don't use options. You know, to me, it's not something I've studied enough to feel comfortable doing. Plus, I do well enough trading shares. Yeah, TSM still looks fine. It just needs to clear that 308 level. Below it, it's just chop. If price is gapping down under a stop loss, do you close the position pre-market or wait for the open? Yeah, it depends how much it's gapping down through that level. Right? If it's just a few cents, then, again, it also depends where it's at structurally. Like iron gapped, above well above where I would have wanted to stop on it, but it came right up to that left side peak. So I just, held tight. No, I don't care about breadth too much overall. I care about how the market is starting to resolve in that particular direction. Right? Breadth to me overall doesn't matter. It's so we've known that breadth is pretty bad now for the last few days. Now we're starting to see a lot of stocks gap down overnight and play catch up to so some of the leading stocks are starting to play catch up to all of the bad breadth in the market. The reason there's been bad breadth is because a lot of things are being sold off while a handful of stocks are holding up really well. Now, on the flip side of that, right, you're now starting to see other stocks gap down effectively, almost in response to how poor the breadth has been. No, I haven't been in BABA for a handful of days now. I exited BABA, I want to say on Friday. No, it wasn't on Friday, on Thursday. Does XBI as a group still look well? Yeah, it still looks good, but there's no buy setup here. Right? It has to go sideways and tighten up. I just haven't studied them well enough. I've done very, very well for myself trading shares because the people that I've studied trade shares, right? When you study Bill O'Neill, he's never talking about options. When I studied Mark Minervini or Dan Zanger or even Christian Koulamagi, they're not trading options. They're trading shares. So that's just the thing that I learned, and it clicked, and I understand it, and I do it well. And, at that point, like, do you go trying to fix something that doesn't need fixing? What's the best and worst trade this year? Oh, man. Iron could have been my worst. At one point I was up 200K on Iron, and at yesterday's highs, I was down about 300,000 on Iron. And I ended up closing it for an 80K loser. So that kind of dodged a small bullet. Tesla is one of my better trades this year, dollar-wise. I had some really nice trades in on the short side with UAMY, Rigetti, UAMY, Rigetti, and I don't remember who the hell the other one was. I'm blanking. Nugget. Sorry. And those were really good because I hit them all back to back to back when things got really extended. Baba was a really great trade this year from $85. I bought Baba way down here. As we were reclaiming the 200 day. What else? I've had a lot of awesome trades this year, man. It's been a long year. There are also some of my worst trades. I've got a few others. Okay, so not dollar wise, CLS was my worst trade. I own this thing at 100 and I shook myself out far too soon. I own this thing on 512 and I shook myself out so terrible on this day when it was dumping. I didn't even give it to the 20 day. So go ahead and laugh. That I would probably say forget about the money because I still made money. I shook myself out of CLS and look at what this thing went on to do. Another one was I never rebought Hood on this gap up. Right? I actually bought Hood on this earnings day at 50 and I set my stop at low of day at 46 and I literally sat through this entire candle and I sold it literally at the bottom in after hours. And I only had 20,000 shares from 50 and I took an 80K loss there. And this is what I missed out on. So yeah, there are a few of my worst trades that I didn't, sometimes have nothing to do with money, right? It's like either not a really super big loss or, you take a win in CLS and you're like, oh man, I got shaken out. And then only for, that to happen. So yeah, man, it's been a pretty memorable year. It's still been an awesome year, though. It's been a really awesome year. A 3-month RS scan's good. 1 month is good, too. Yeah, 1 month is good. 3 month. Nah, there's no setup here. Like how the hell do you get involved in this thing? There's no real spot to buy it. Was there a particular trigger for the overnight gap down? No, it looks like kind of the futures markets are just yanking everything down at the moment. And then it doesn't look like Palantir helped with earnings. What percent of the trade do I trim on the first 3 to 5 days? Sometimes up to half, a third to a half. And then I try my best to just, take into account what it is that the market's doing at the moment. I've been trading for 5.5, a little over 5.5 years, roughly. Yeah, their top 50 list for IBDs is a really good list. How do I stomach that? That 200K to negative 300. How do I stomach that? I mean, it's just when I look at what I'm down, I just think about it in terms of percentage, right? So it doesn't really bother me because it's not a big percent of my portfolio. I mean, it's still a lot of money, but I always think of things in terms of percentage. So, and not to mention, my Oklo short was still paying me overnight. My Dell gapped up because of iron. And then iron, then kind of failed and started to come back down and I started to get some of my money back. And meanwhile, Oklo's still fading off. So, yesterday actually ended up being an okay day. Like completely manageable where, I'm losing less than 0.5% in my portfolio. So something that I can totally overcome in, a single trade. Like I had like a period there where I had 12 straight losing trades and I lost like 1.5% of my portfolio. And in one Rigetti trade, I make that money back. So, it just doesn't really matter, right? My Nugget trade, had I closed iron for that kind of a loss, my Nugget trade, made me more. So that's just kind of the thing that I always remind myself, like one good trade could make up for a mistake or, something crappy um, at any time. Why trimming and not following the moving averages? Part of the reason is I want to treat it like a business and make sure that I get paid some into strength, right? It makes holding through the pullbacks less emotional, right? I don't just want to follow the ascending moving averages. I want to make sure that I put some money in my pocket. Look, the way I've learned it is I'm trying to improve my worst case scenario as quickly as possible. So when I get a 1 to 3 or a 1 to 2 day push, I move my stop up from low of day to break even. When I get that 3 to 5 day push, I take some off the table. And then now, no matter what happens, I go from potentially losing money to not losing any money at all to now I've made a little bit of money. And now I can really let the trade work and go on and be a home run if it's what it wants to do. What is the most important thing you look for in a good setup? Tight day at the top of range, moving average surf. Yeah, all of the above are good. And then just making sure that it's a good setup has to be in a strong group. Otherwise, it's not that great of a setup. It's just like some one-off stock in its own little world. I want to make sure that I'm trading stocks within good groups. Your order on FSLY finally triggered. Yeah, over 850 could look pretty good. It depends. If we're coming out of a correction, I'm happy to buy the whole thing. If it's super liquid, I'm happy to buy the whole thing. It depends how quickly it moves that I can then buy the whole thing. Would you be more aggressive if your account was smaller, though less trims, more risk? No, not necessarily. I wouldn't really trade any differently because it resonates with my personality. I'm not so focused on getting rich. I'm focused on this being a 30 to 40 year career. 10 to 15%, 10 to 15% size portfolio positions, and that's it. So anyway, guys, got to get moving. Time to start the stream. I will see you guys tomorrow morning. Hopefully you guys trade them well today. Please be safe out there. No need to try and catch a bottom, especially not in meta. Let things set up properly. Be patient, and it might take a few days. And I will see you guys tomorrow morning. Take care.